Welcome to our Advanced Trading Concepts series. In this episode, we delve into the complex world of derivatives, focusing on swaps and structured products. These sophisticated financial instruments are integral to modern finance, but require a deep understanding due to their complexity and inherent risks. Complex derivatives are not standard stock or bond investments. They are intricate contracts whose value is derived from underlying assets, indexes, or interest rates. They play a crucial role in risk management, hedging, and speculative strategies. Swaps are financial agreements to exchange cash flows between two parties. Common types include interest rate swaps, where parties exchange fixed rate and floating rate interest payments, and currency swaps, involving the exchange of principal and interest payments in different currencies. For instance, in an interest rate swap, a company with a variable rate loan might swap payments with another company that has a fixed rate loan, effectively allowing both companies to hedge against interest rate fluctuations. Structured products are pre-packaged investments that combine derivatives with other financial instruments. They are tailored to meet specific risk-reward objectives and often involve options and fixed income assets. A typical structured product might be a principal-protected note, offering a guaranteed return of principal with additional returns based on the performance of a stock index. These complex derivatives are used for various purposes, including hedging against market risks, diversifying portfolios, gaining access to asset classes or markets, and leveraging investment positions. However, trading in complex derivatives carries significant risks. These include market risk, credit risk from counterparties, liquidity risk, and complexity risk, as these instruments can be difficult to value and understand. For example, in a currency swap, if one party defaults or if there's a significant shift in currency values, the other party could face substantial losses. The regulatory environment for complex derivatives is stringent and evolving, with financial authorities imposing rules to ensure transparency, adequate risk management, and to prevent systemic market disruptions. In conclusion, while swaps and structured products offer unique opportunities for risk management and investment diversification, they demand a high level of financial expertise, risk assessment, and due diligence. Understanding the intricacies of these financial instruments is crucial for sophisticated market participants. Exciting topics await in our Advanced Trading Concepts series. Join us as we deepen your insights into the financial markets. Thank you for watching. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.